Hello everyone, I'm Dr. Stock, and in this video we're taking a look at the economic events that we have coming up for this week. We're also taking a look at the markets and also some of the earnings that I think are worth mentioning. So stick around for this video, and I think that you'll like the information that I have in here for you along the things that you would like. Do yourself a favor, look down in the description of this video, find my link for Moomoo, click on it, sign up, and deposit your money. By depositing $100 or more, you get up to 17 free stocks. Here's what it looks like. By doing a deposit of $100, you get 7 free stocks. By depositing $1,000, you get 17 free stocks. Whichever you choose, you get a free share of AI and a free share of BBAI guaranteed, along with the other stocks that come along with it. This offer does expire, so take advantage of it before it runs out. Also, while you're looking down in the description, find my link for the Patreon, click on it, sign up, get access to my Patreon exclusive content, as well as access to my private Discord with my community members that are over there. All that being said, let's move right on to the content. So just a quick look where the market left us off. Last week, it dropped us at 404 on the SPY. So that's about 1% up above that 400 resistance that we had, or 4,000 on the S&P. And when you look at this, just using some horizontals here, right at about 408, so about 1% up from where it left us off. We have pretty easy time reaching that level if we need to. If we break through that resistance, we have room for about 1% more up to 412, and then possibly, really, if we would rally really strongly through that, maybe we see that 416 happen. Not necessarily all tomorrow, I don't mean that, but throughout the week, if we don't really see things that make us stumble, that kind of keep on giving us green lights in the economy, then that could be something that plays out well for us. And maybe we see a third white soldier popping out here that shows us that we're going to have a little bit more strength, and the market continues this rally that we had the past 2 days, and maybe allows us to revisit this previous high that we saw, maybe leading up to the CPI. If we get a good CPI, maybe that's the thing that puts us up to this most recent high that we have. Honestly, I think a lot of attention is going to go to that FOMC meeting that comes up March 22nd, March 23rd. If you haven't watched my most recent video on that, make sure that you take a look and check that out, because I gave my take on what I think the Fed's going to do with their summary of economic projections, and I really think it's worth a look. So we do have some room for upward movement, 1%, maybe 2%. Honestly, we got 1% up tomorrow. I wouldn't be too surprised if we kind of flounder a little bit, because after 2 big strong days, maybe we trade sideways for a little bit. Also understandable, but we do know that we are hitting really solid support down here at 392. So we'll watch and see as that plays out. I don't think that we put in any new really significant lows, and we are back up above the 50-day, which is a really good sign in the SPY. Let's move on to the Qs. All right, so the Q is looking a lot the same, and you can see we bounced off the 200-day. Worked excellently as support for us, and we have a fair amount of room. Let me see if I can zoom out here. There we go. Perfect. So from where we're at right now, again, just off a couple of horizontal lines, looks like we have a little bit of weak resistance at about 1.5% up from where we most recently had, and that's assuming we would continue the rally that we had, and that would be assuming that we don't really have too much fear about Jerome Powell coming out and speaking on Tuesday. I'll get to that with the economic report stuff in just a moment, but there's really not a lot of roadblocks for us. Even if we zoom out some more, there we go. We still have room to go up another, well, it'd be $5 in the Qs. So what's that? About 1 2/3% where it's at from where it sits right now. So do we get another nice strong green day in the markets? I guess we're going to have to wait and see as that takes place. I said now for a few weeks, I believe. I'd have to go back and check. I think definitely 1 week, possibly up to 2 weeks, that I said at the beginning of March we could see some levity, some upward pressure, some upward movement in the markets. Maybe we're starting to see it turn around now. And, well, maybe I'm right about that. So this week will tell me more about what's happening there. And then you guys will know more about whether or not I was right about that. And then, as always, you're welcome to let me know in the comments what you think about anything I say in this video. Ask any questions that you want to. I'd be glad to hear from you. So I think just on the downside of this, that 200-day, I think as long as we don't get really anything changing from what we've seen so far, from what we believe so far about interest rates, about federal funds rate, about inflation, you name it, without any significant news coming our way. I should also mention jobs, that's another one, unemployment, job openings, those are all things that really could move the markets. 200-day, probably will hold out for us. We'll have to wait and see. Like I said, we get something surprising throughout the next week. When we look at those economic catalysts, I'll talk more about that. That could be something that could send us downward. But I think for right now, at least in the short term, we can rely on that 200-day as support. So I snagged this image off of Moo, and they put out some highlights for us. So on Tuesday at 10 a.m., Jerome Powell testifying to the Senate. We want to listen for words like deflation and recession, see if he repeats himself thematically on those things, and we'll see. I don't know that a lot of what he's going to say is going to be more so than what he's already said. I think there'll be a lot of reiteration for that one happening. I still think that March 22nd and 23rd, their next FOMC meeting, and when we get the summary of economic projections, I think that'll be the big thing. So I think we still have a few weeks before we get major movements from the Fed. Now, inflation reports aside, that is, because CPI, PPI, I've been talking about those March 14th, March 15th. Those are ones that we're going to have to watch out for. Wholesale inventories, we want to make sure that they're not stacking up on us. We also want to make sure that they're not draining away too quickly. Let me see. Employment, we're looking for strong employment numbers, about 180,000 jobs added. On Wednesday, 10 a.m., we have Powell testifying to the House. Same thing that I said about Tuesday. I don't think that we'll get anything really all that different coming from him. I don't know that it'll be a huge thing to move the markets. We're going to have to see. JOLTS, I think, is the next big thing. We're going to watch job openings coming Wednesday, 10 a.m. That could move the markets on us depending on what it has to tell us about the demand for labor and the labor market. So be on the lookout for that one. Jobless claims, that's another one. Really, is the labor market staying tight, or do we start to see some loosening, finally some cracks appearing? Friday at 8:30 is the big one. Are we going to get surprised like we did in January at the 517,000, or is it going to stay softer at the 215,000? Still a strong number, but nothing like the surprise that really no one expected coming out in January. So definitely Friday, 8:30 a.m. That's something that we'll most definitely want to watch because that can move markets on us. If that comes in hot like January did, that could be negative for the markets, could cause us to drop. We're going to have to watch that. Just some of the earnings worth paying attention to. Well, I don't know if that Lordstown Motors is, but let me tell you, oh my gosh, I don't know what they have left. I don't really follow them, but everything that I have heard, every little thing that I have seen, nothing really spells out strength from Lordstown Motors. So I wish them the best. Dick's Sporting Goods, that's one that can really tell us a lot about the consumer. So Tuesday before the bell, like that could be a good one for us to watch on Monday to see how it's setting us up for Tuesday. So they're currently trading right around the top of their price range from the highest levels. And is this the earnings report that really puts them back at their highest value, or is it something that we kind of see some weakness coming from? I don't know that we have a good enough setup for 2023 to really shove them back up to new highs. I don't really follow the company. I haven't studied them fundamentally. I just took a quick glance at their charts and thinking about the position of the consumer and what other retail stores have said. Dick's Sporting Goods, they might be able to. Like I said, I don't have the backstory on them, but it makes me wonder about their earnings coming up, if that's something that's going to be show good strength and is going to push them up to retesting their previous high. So, which is just a few weeks ago, by the way. It's not old. So we'll see. I think the current price target right now is like about $135, and they're already close to that. CrowdStrike, they've had a rough time of it. They ran up during the pandemic and they've come crashing back down. And for them, they've not recovered the way that other growth stocks have during the January rally, we'll say. They're still pretty much falling right off their highs. They haven't put in a new higher high anytime recently. So we'll see if CrowdStrike can start turning that around. They are expected to grow. They do have free cash flow going for them. So I think there's some strength there. I think there's some possibility for CrowdStrike. It's one that really intrigues me. So that's Tuesday after the bell that comes out. And I wouldn't be surprised to find out that people are bullish on that one. And that's something that actually finally breaks out of its current trend, at least a little bit. So surprising to the upside, could possibly happen for CrowdStrike. Thursday before the bell, we have BJ's Wholesale Club. We're going to have to watch that one as well. Like I said, it tells us a lot. Being a wholesale club, that could be one that during recessions actually does quite well for us. We're going to have to look and see how that does. If they're giving soft guidance or not, they really will tell us a lot about the consumer. So we want to be looking into their earnings, listening to the earnings call, and seeing what they have to say, and checking out their guidance moving forward from here. And then Oracle, really strong software play that we have, and they're not necessarily one that I follow, but definitely a company that has withstood the test of time, and I don't think they're going anywhere anytime soon. So let me summarize. The markets ahead, we actually have room for the market to kind of keep experiencing some upward pressure. We'll see if that happens. Watching for what Jerome Powell says on Tuesday, Wednesday. I think they're both at 10 a.m. listening to his testimony that he puts out there. And really, people will be scrutinizing his every word for indications for what exactly the Fed is planning for March 22nd and March 23rd. And, we'll see if the market interprets anything he says as extremely hawkish, extremely dovish, somewhere in between. And the market's going to tell us what it thinks of what he said, and it won't take long to do it. So that 10 o'clock hour, probably by 11 o'clock, we'll have some very telling signs on that testimony and how it was received. Don't forget about job numbers. Those are ones that we also want to see for the job market. We don't want to see that is over tightening, if you will. We don't want to be surprised like we were in January for that one. Earnings, we want to look for signs about the consumer, especially coming from Dick's Sporting Goods, BJ's Wholesale. Those are the two big ones that I'm looking forward to. And as the week plays out, I plan on looking at these companies to see if there's any sort of play there, options-wise or otherwise, for earnings that could give us some indication of direction. I will share that with the members of the Patreon, and then I'll also bring a more summarized version over to YouTube so that you guys know what's happening. Anything that I buy and sell, I will announce over in my private Discord that's over there as well. This week could end up being a decent week for us. We're going to have to watch and see. I can say at the very worst, I don't think it's going to be a horrible week for us. Aside from getting surprised by any of the economic reports or by some unexpected thing from Jerome Powell's testimony, I think we could still see a little bit of strength, at least between the beginning of the week and end of the week in the market, still persisting for us. I think that worry over CPI and PPI is that thing. So not Monday today, but Monday the following week. That would be March the 13th. That's the day that I think could be pretty fearful for us for what exactly is going to happen at 8:30 a.m. on the 14th with the CPI, because that's going to be very telling for us. And then following, I believe it's 8:30 as well for the PPI on March the 15th, and that's Wednesday of next week. So those reports are going to be very telling for us for a little bit more of what to expect from the Fed at that March meeting when it comes out. I think that's where these economic reports are, everything that's read, interpreted, heard, reported, whatever. I think all eyes are then going to the FOMC meeting, or all minds are going to the FOMC meeting and just trying to predict what exactly the Fed's going to do next about the economy. Are they going to continue to tighten as much as we think, more so than we think? Or can they tighten less than we think? Is there a pause expected in 2023 following everything that we hear between now and that meeting? Those are a lot of questions on my mind, I know, and the ones that I want to try and anticipate prior to the time that we get there, because of whatever I can anticipate, the better I can anticipate it, at least I can plan for it, because as soon as it's announced and it becomes public information, the market reacts, and then, you're kind of left reacting to whatever the market does. And that's something that I would like to beat out if I can. So that's what I have for you guys today. Thank you for listening to my commentary. If you'd like to hear more of what I have to say, please check out that link for the Patreon down in the description. I'd absolutely love to have you over there, being a part of my community and also getting access to the Patreon exclusive content that's over there as well. Don't forget about those free stocks from Moo. That link also is in the description. Thank you so much for listening. Click the like button, hit subscribe, and ring that notification bell to see anytime that my videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.